Hi, did you know there's a fund that lets you invest across almost the entire Indian market in one go? On 23rd October 2023, Groww Mutual Fund launched the Groww Nifty Total Market Index Fund, seeking to give investors exposure to almost 750 stocks across 22 sectors, from large to micro caps. Today, I'm joined by Mugdha from the Groww Mutual Fund team to dive into why this fund was launched, how it works, and how it aims to capture India's growth story for retail investors. Let's get into it.
Hi Mugdha, welcome on board. So the Groww Nifty Total Market Index Fund has completed 1 full year since its launch. When Groww Mutual Fund introduced this scheme, it was also India's first fund which was based on the Nifty Total Market Index. So my first question to you is, why did Groww Mutual Fund decide to launch this fund?
Hi, Karunya. Right, this is a great question. I'm actually very excited to talk about this fund. So, back 1 year ago when we were starting up, what we noticed was that there is no single fund out there in the market which provides investors the opportunity to invest in the entire market, right? If you look at the US market also, one of the most popular funds out there is a total market index fund. So, there was a very obvious gap in the market. There was no fund which offered a very simplified option to investors, right? So we began digging deeper along these lines. Now, from an investor standpoint, suppose you are not sure where to invest, you're not sure which stocks to pick, what sectors to get into, or even something like you don't want to get into the hassle of it, right? You just want a very simple, uncomplicated option to invest into the equity markets in India today. What do? So this is where this fund comes into picture, and that's one of the primary decisions why we decided to launch this fund, which is in line with our principle of offering investors a large, diversified, easy investing option.
So can you explain a little bit more about the index that the fund is based on?
Sure. So this is a highly diversified index in the sense that it offers around 750 stocks that are listed on NSE today, which approximately covers 96% of NSE's market cap. Right? What we get with this index is an exposure to 21 sectors, a mix of large, mid, small, and micro cap stocks, with a little bit more weightage towards large cap stocks because the index has around 70% weightage towards large cap, and the rest 30% is split between mid, small, and micro cap stocks.
So could you also give us a sense on the performance of the Nifty Total Market Index vis-a-vis Nifty 50 over the various time frames?
So, Nifty 50 as an index tracks the top 50 companies of India, the largest companies that are there in the market out there. What Total Market Index does is it tracks the top 750 stocks listed in the Indian stock market. So, how this translates in terms of returns is that through a period of 1 year or 3 years, 5 years, 10 or even 15 years, which is a long term investment horizon, this index has managed to generate better returns than Nifty.
So 750 stocks. How will you exactly manage the tracking error of these 750 stocks?
So, as an index fund, the primary objective of any index fund is to be able to track the underlying index as closely as possible, right? And that's exactly what tracking error is. It basically tells you how closely is a particular fund able to track the index that it's based on. Right. So, to be able to address this effectively, Groww Mutual Fund has developed an in house technology, something we call Spear technology. What this technology does is it is able to help us replicate the index at a much faster pace, at a much higher frequency. The results of this are pretty something that I would like to share. In the past 1 year, the tracking error of a fund has significantly reduced.
So, Mugdha, how does the Groww Nifty Total Market Index Fund exactly align with India's economic growth story?
So, Indian markets in general, if we look at, they're extremely dynamic and unique, right? For example, if we look at the US market, for the past couple of years now, we have seen that the returns in the markets have been generated largely by large cap stocks from the technology sector, right? If we compare this with the Indian markets, the stocks and sectors that generate returns change from one period to another. The stocks that are doing well today might change tomorrow. Similarly, winning sectors keep changing from one period to another. So, this gives rise to a highly dynamic environment. Now, if we are to then benefit from such an environment which keeps changing one period to another constantly, that's where I think the index does a good job because essentially is giving you exposure to almost the entire market. So, what you have now is the benefit of large caps along with the growth potential that comes with mid and small cap stocks.
And lastly, who should consider the Groww Nifty Total Market Index Fund for their portfolios?
So, we truly believe that this is one of those funds which is essentially for everybody. For instance, if you're a beginner investor and you're unsure of where to put your money, this could be the starting point for you. Or if you're someone who doesn't want to get into the hassle of stock picking and sectors, etc., again, this could be one of your options. Or simply put, if you're someone who truly believes in India's growth story and just wants exposure to the Indian equity markets, this fund could again be a good choice, maybe.
All right, Mugdha, thank you so much for joining in and talking to us in detail about the Groww Nifty Total Market Index Fund.
Thanks, Karunya, for having me.
I hope this conversation helped you understand how the Groww Nifty Total Market Index Fund works, the details of its underlying index, and how it seeks to offer exposure across India's market landscape. You can read all scheme-related documents on growmf.in. And remember to consult your financial advisor before investing. Do let us know your thoughts on the Groww Nifty Total Market Index Fund. Until next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.